Now, just can you tell some third-party products that the banks to offer to customers? Can you just think it over that what the third-party products are available to the customers from the banks? Just make a brilliant guess. You know that already. You are aware of it. Maybe can you just spend a minute and then think it over. What are the third product or products are available from the bank? Okay, yes, I tell you. The third party products offered by the banks within distribution service or the mutual funds units to start with, and even the banks are selling insurance policies. The banks are selling government bonds. The banks are selling gold coins. The banks are allowed to do a recharge for your mobile phones, and the banks are asked to manage shares of organizations whenever there is a public issue by these companies. So all these activities are considered to be third party products, and these products are being handled by the commercial banks nowadays. What is a mutual fund? What is an insurance policy? What is a government bond? Gold coin, all of you must be aware. It's only a coin which is made of gold. And mobile phone recharge, you must be knowing that if you travel on a street, you can see that every second shop there is a mobile phone recharge facility available. But in spite of that, the commercial bank is saying that I will do it for you. So we are also doing this mobile phone recharge activity, and also we manage manage shares of different companies whenever there is a issue of a public issues. We collect money on behalf of the company, and we also get engaged ourselves to various activities of the company in the process of issuing public shares, public issues. What is the collection facility which is offered? The collection facility is offered in case of taxes, in case of utility bills, and also for online payments. When we talk about taxes, what are the taxes that are included in the term called taxes? You can find out. Income tax is income tax, service tax, excise duty, and customs duty. All these are included in the term called taxes. Let us talk about Demat account. See, in the initial days before this electronic banking came into picture, whenever we want to invest our money into shares of different public companies, public undertakings, or any companies for that matter, all public sector undertakings and public companies, public limited companies, you can invest your shares. Maybe you may not be able to invest in private limited, but public limited companies are often allowing public to invest in their company. So in that case, what happens? You apply for a share, and you may get the shares a notification from the company saying that yes, we are willing to sell X amount of shares, maybe 100 shares of to you, so that you can make the payment. You make the payment, and you get a share certificate. Okay, that share certificate you need to possess with you. Suppose if you want to sell the shares maybe after 2 years or 3 years, whenever you feel that yes, I have got some returns from this particular share, and I want to encash this particular share certificate because I need some money for other activity. So what you can do, you can go to your share broker and tell him that I want to sell these shares, so that the broker take your share certificate and he just sells it in the market, and then you discharge the share certificate and you get the money from through a share broker. That is the way when you handle the manual share certificate, you buy the shares, and similarly you can sell the shares also. When it comes to electronic banking now, what happens after the introduction of electronic banking and after the introduction of Demat account? See, when you want to involve yourself into the shares buying and selling activity, nowadays you have to open two type of accounts with the bank. One is called trading account, the other one is called a Demat account. The trading account is for your debits and credits. Whatever money you keep some money with the bank, with that money you go and buy a share so that your balance will come down. Suppose if you sell the share later on, you get some credits, your balance will go up. For that activity, buying and selling of shares, this trading account is being kept in a bank. Similarly, there is one more account is being given to you in the name of Demat account. Why this account is required? Because earlier days we used to have the share certificate with us. Nowadays there is no physical share certificate given by any company. They will tell you that you have been allotted so much shares and these shares are transferred to your demat account. So suppose if you have a demat account with HDFC Bank and you have a trading account with HDFC Bank, naturally you have both the accounts only with the same bank for convenient purpose. So what happens, this if you buy some 100 shares of Tata Motors will send you a communication saying that we have already transferred the 100 shares in your name and these shares are sent to your HDFC Bank. So HDFC Bank will get a notification saying that so and so have been allotted 100 shares of our company Tata Motors and you can hold these shares on your customer behalf. Okay. So this demat account has the number of shares which is not in physical form, which is in the electronic form. That is the reason we have just come to know about this demat account. It facilitates holding of shares in a dematerialized form. Okay. Otherwise we can say it's an electronic form. And it facilitates transmission of security by DP, eliminating correspondence with the companies. What is meant by DP? I told you, HDFC Bank is a bank where you hold the trading account and demat account, correct? So the DP is nothing but it's called a depository participant. Here in this case, for you, the HDFC is the depository participant. They hold their shares on your behalf, and whenever you want to sell or buy, they just get into the activity of doing it. So it enables demat account enables automatic credit into demat account of shares arising out of events such as bonus, split, consolidation or merger. What happens when you have some under shares of Tata Motors at the end of the year, when the Tata Motors ending with some profit, they give you some dividend. Okay, that comes in the form of money you get into your account. Whereas they may allot some more bonus shares. In that case, these bonus shares are getting accumulated in your demat account. Earlier you must be having 100 shares. Suppose if you get another 10 shares as bonus, then now it will be 110 shares of Tata Motors in your demat account. Okay. It also facilitates holding of investments in equity and debt instruments in a single account. See, we spoke about the shares from Tata Motors. Suppose this is called equity. Suppose when you want to invest money in debentures, see, debenture, the difference between shares and debentures is that debentures you are giving a loan to your company. Share means you are investing some money into the share of a capital. So that is the difference. You are giving a loan is called debenture, whereas you are participating in the capital of the company is called shares. So when you buy some debentures from another company, and that is called debt instrument. That also can be kept in the same demat account. That facility you have. So at a particular point of time, you can find out how many shares of Tata Motors you have and how many number of debentures you hold for Ashok Leyland. Both you can see in the same account and both can be kept in the same account. Okay. It is just like keeping these hot copies in your cupboard, something like that. These are the dematerialized shares, number of shares can be kept in the same account, and it can be kept for some time till you decide about the fate of it. It is very safe and convenient way to hold these securities. And for information, by keeping these shares and debentures in a dematerialized form, it will not attract any stamp duty, because there is no question of physical transfers moving here and there. It is all through electronic mode. So this totally the stamp duty is being avoided. And it also eliminates the risk associated with the bad delivery, fake securities, delays or thefts. For example, when you hold the certificates, if you hold it in your house in a particular place in a proper manner, no problem. But if you just keep it along with some other papers, and if you are not keeping it in a perfect manner, and if you fold it, or if it is become toned off here and there, when you fold it for a long time, when you open it, you can see that there is it is not in the proper form, or there may be a chance that it would have gone to somewhere else, or you may be misplaced somewhere. All that will go off with the dematerialized form. So this risk associated with the bad delivery or fake securities or delays or thefts, all that will go off because of this particular facility. So it is better to have a demat account and a trading account with the same entity with the same, and your DP also the same entity. So it's very helpful to you to have this particular transaction with one bank or with one entity. Okay.